No doubts? Okay. Let's start. So we have discussed about the bank's lending rates, the lending rate regime in India in 1969, the bank nationalization. Is PPT visible?
Yes, sir.
Okay, great. So bank lending rates and all these things we have discussed. The administered interest rate, you can see that post the bank nationalization, there was an administered interest rate system set by the government. In that case, the banks were not allowed to set their lending rates. That was a very difficult time for not only businesses, but banks were also facing some kind of trouble. That's why the government intervention was there for the people's welfare. And in 1991, M. Narasimhan Committee, we have also discussed about the 1991 reforms in India, that is liberalization, privatization, and globalization. And what happened when India adopted for the kind of mixed economy, the some part of some functions or the some attributes of the capitalism and some attributes of the socialism. We have. Wait for a moment. Some attributes of the capitalism and some attributes of the socialism India adopted. But more or less, India had the socialistic leaning. So production process was in government's hand and the private sector was facing restriction from the government sides. So there was no incentive and ease of doing business for the businesses at that time. And we also discussed about why the foreign direct investment was not allowed in India, because recently, like in 1947, I'm talking about, at that time, India got independence and there was a colonial mindset in the countries which like Britain and USA, जो की countries थी जहाँ पे colonialism practice हो रहा था. इंडिया पे वो रूल किया उन्होंने, इंडिया को कॉलोनी बनाया था. There was a general apprehension among our freedom fighters, or you can say at that time the interim government. We talk about interim government and all those people who were setting the policies for India. They had a general apprehension that if we allowed the foreign direct investment in India, there is a possibility of the crony capitalism. And because जो East India Company का case था, East India Company was also a private body which came to India with the aim of doing business, but post that they entered into the political domain and India became their colony. So that apprehension was also there, and other things were there. So that at that time, trade was restricted and the business peoples or the private businesses were not allowed to do their business. उनको इंसेंटिव किया ही नहीं गवर्नमेंट ने, और मैन्युफैक्चरिंग बेस इंडिया का इतना अच्छा हो नहीं पाया, ये हमने कल डिस्कस किया था. और इसीलिए इंडिया के एक्सपोर्ट्स इतने अच्छे नहीं हुए, बिकॉज सरप्लस हम प्रोडक्शन कर ही नहीं पा रहे थे. और एफडीआई नहीं आने की वजह से फॉरेन कैपिटल नहीं आ रहा था इंडिया में. अलॉन्ग विद दैट कैपिटल नहीं आ रहा था, तो कैपिटल के साथ साथ टेक्निकल नो हाउ भी नहीं हो पा रहा था. न्यू टेक्नोलॉजी भी इंडिया में नहीं आ पा रही थी, बिकॉज प्रोडक्शन प्रोसेस इंडिया में कर ही नहीं पा रही थी फॉरेन कंपनीज. तो वो अपने साथ टेक्निकल नो हाउ भी लेके नहीं आ रही थी. और मैनेजमेंट का एक कल्चर होता है फॉरेन कंट्रीज का विच वाज बेटर देन इंडिया, बिकॉज द इंडस्ट्रियलाइजेशन हैपेंड इन ब्रिटेन एंड द यूरोप. पहले वहां हुआ, उसके बाद इंडिया में तो काफी लेट आई मशीनरी एंड ऑल दीज थिंग्स. तो वहां का कल्चर जो था वो रिलेटिवली बिजनेस कल्चर जो था वो बेटर था इंडिया से. तो क्योंकि एफडीआई नहीं था तो वो सारी चीजें इंडिया में आ नहीं पाई. तो ये वाले कुछ इश्यूज थे, दैट्स वाई. और एडमिनिस्ट्रेटेड इंटरेस्ट रेट सिस्टम भी था. ठीक है, तो रिस्ट्रिक्टिव ट्रेड पॉलिसीज को हमने कल डिस्कस किया था. एलपीजी हमने कल डिस्कस किया था, लिबरलाइजेशन, प्राइवेटाइजेशन एंड ग्लोबलाइजेशन. इन 1991 वो कमेटी बनी थी, एम नरसिम्हम कमेटी, जिन्होंने डीरेगुलेशन सजेस्ट किया था. और उन्होंने बोला था कि आप प्राइवेटाइजेशन भी करो, बैंक्स को अलाउ करो, और ये जो इंटरेस्ट रेट है, इंटरेस्ट रेट का जो मैकेनिज्म है, सिर्फ वो मेथोडोलॉजी या एसओपी जो है, ऑपरेटिंग प्रोसीजर, वो आप बैंक्स को बता दो. बैंक्स अपने लेवल पे इन सारी चीजों को सेट कर देंगे. ये नरसिम्हम कमेटी ने रिकमेंड किया, तो गवर्नमेंट ने उनकी बातें मानी भी थी और काफी लिबरलाइज हुआ मामला. नेक्स्ट इन 2003 बेंचमार्क प्राइम लेंडिंग रेट आई थी, उसमें आप एक्चुअल कॉस्ट ऑफ फंड्स देख रहे थे। इसमें बेंचमार्क प्राइम लेंडिंग रेट में ये होता था कि आप किसी बेंचमार्क से जोड़ सकते थे खुद को एक्सटर्नल या इंटरनल से, तो इसलिए इसको बेंचमार्क प्राइम लेंडिंग रेट कहा गया। ये सिस्टम 2003 में स्टार्ट हुआ और धीरे धीरे ये भी बहुत ज्यादा इफेक्टिव नहीं था। इसमें भी चेंज लाने के लिए गवर्नमेंट ने नेक्स्ट में क्या लाया, 2010 में RBI introduced the base rate plus the spread system. Spread, we know that the difference between the borrowing and lending interest rates of the bank. बेस रेट क्या होता है, बेस रेट इज मिनिमम इंटरेस्ट रेट सेट बाय आरबीआई। सो आरबीआई बेस रेट सेट कर देता था और उसके बाद उससे बिलो आप लेंडिंग नहीं कर सकते, मतलब उससे बिलो आपके लिए सस्टेनेबल नहीं रहेगा, तो बैंक्स वर नॉट अलाउड टू डू लेंडिंग बिलो द बेस रेट। और बेस रेट के बाद आप स्प्रेड सिस्टम के हिसाब से अपनी जो सेविंग रेट या सेविंग्स और करंट अकाउंट पे जो इंटरेस्ट रेट आप कॉमन मैन को पे कर रहे हो और जो आप लैंडिंग रेट तो डिसाइड ही हो रही थी, उस स्प्रेड के हिसाब से आप अपनी अल्टीमेटली लैंडिंग रेट डिसाइड कर सकते थे। थोड़ा सा माइनर प्रिविलेज था बैंक्स को। 2016 में आरबीआई ने इंट्रोड्यूस किया एमसीएलआर, दैट इज मार्जिनल कॉस्ट बेस्ड लेंडिंग रेट, एमसीएलआर प्लस स्प्रेड सिस्टम। स्प्रेड सिस्टम तो कंटिन्यू रहा ही है सब में। एमसीएलआर में क्या हो रहा था, एमसीएलआर बैंक इंटरनली डिसाइड कर रहे थे, तो बेस रेट सिस्टम जो था उसमें आरबीआई करता था काम, की बेस रेट आरबीआई डिसाइड कर रहा है, बट एमसीएलआर जो थी वो इंटरनली बैंक से डिटरमाइन करते थे। बैंक्स कैलकुलेट करते थे मंथली बेसिस पे, दे टेक कॉस्ट ऑफ ऑल ऑपरेशन इनटू कंसिडरेशन, मतलब सारे ऑपरेशन, वो जो पूरा मनी चैनलाइज करना है, इसके अलावा और भी जो बैंकिंग ऑपरेशन है सबको कंसिडर करते थे। एसओपी बाय आरबीआई, तो एमसीएलआर को डिसाइड करने का एक एसओपी जो होता था, स्टैंडर्ड ऑपरेटिंग प्रोसीजर या फिर मेथोडोलॉजी, कि कैसे आप एमसीएलआर डिसाइड करोगे, क्या क्या आपको एट्रीब्यूट्स कंसीडर करने हैं, क्या क्या आप फैक्टर्स कंसीडर करोगे वाइल डिसाइडिंग एमसीएलआर, ये जो सारी बातें थी ये आरबीआई बताता था। तो एक आप ऐसा कहोगे कि एक स्टैंडर्ड सिस्टम क्रिएट हो रहा था लैंडिंग रेट्स को डिसाइड करने का, ठीक है। एमसीएल कल इस पर हमने क्वेश्चन भी डिस्कस किया था। पोस्ट दैट ये जो अभी करंट सिस्टम चल रहा है, दैट इज द एक्सटर्नल बेंचमार्क प्लस स्प्रेड सिस्टम 2019। सो आरबीआई केम अप विद अ न्यू सिस्टम, दैट इज एक्सटर्नल बेंचमार्क प्लस स्प्रेड सिस्टम। You can see on the screen. Individual banks are free to pick up any one external benchmark. Okay, any one external benchmark to decide their lending rate. कौन सा एक्सटर्नल बेंचमार्क डिसाइड करना है आपको, उनकी एक लिस्ट है जो आरबीआई डिसाइड करता है कि ये एक्सटर्नल बेंचमार्क से कोई भी आप ले सकते हो। मोस्टली बैंक्स जो हैं वो रेपो रेट को ही चूज करते हैं, बिकॉज वो पॉलिसी रेट है और उसके अंदर चेंजेस रहेंगे तो ट्रांसमिशन रिलेटिवली क्या रहेगा, इजी रहेगा। और आरबीआई पॉलिसी रेट को चेंज ही मार्केट के हिसाब से करता है और मार्केट में मनी सप्लाई के हिसाब से करता है, तो वो उनके लिए ऑप्टिमम रहता है कि कमर्शियल बैंक्स जो हैं एक्सटर्नल बेंचमार्क में रेपो रेट को चूज करें। ओके, नेक्स्ट इज द बैंक कैन ऑल्सो चूज सेपरेट बेंचमार्क फॉर डिफरेंट कैटेगरी ऑफ लोन्स। तो आप अपनी फिजिबिलिटी के हिसाब से कि किस तरीके का लोन आप आगे देने वाले हो, उसके हिसाब से आप चूज कर सकते हो सेपरेट बेंचमार्क फॉर डिफरेंट कैटेगरी। हाउस लोन के लिए आप अलग बेंचमार्क सेट कर सकते हो, एजुकेशन लोन के लिए अलग कर सकते हो, पर्सनल लोन के लिए अलग कर सकते हो, कार लोन के लिए अलग कर सकते हो। तो डिफरेंट कैटेगरी ऑफ लोन्स के लिए आप सेपरेट बेंचमार्क सेट कर सकते हो। ये भी प्रिविलेज आपको दिया गया था, बैंक्स को ये प्रिविलेज दिया गया था। ओके, so being an external system, this was an external system. This means any policy rate cut decision will reach the borrowers faster. We are talking about the transmission of the policy. Wait for a moment. Okay. Am I audible again?
Yes, sir.
Yes, sir.
Okay, great. So the external benchmark plus spread system introduced in 2019, which was important because the transmission of monetary policy was one thing which was supposed to happen. And previously, when the base rate system was there or some other system which were introduced by RBI were not that effective. So for doing the transmission of monetary policy, RBI came up with the external benchmark system and the spread system 2019. So the transmission was the main key point here, which you need to understand. So in sometimes in the examination they might ask this. This happened. Okay. Now, the being an external system, this means any policy rate cut decision will reach the borrowers faster. Okay, because if the banks are deciding that their lending rates will be decided by the external benchmark, which is repo rate. So whenever the monetary policy committee comes into picture and they change their repo rate, in that case, what will happen? If the repo rate will change, then the lending rates of bank will automatically replicate that change. Because why? Because they are linked. So banks won't need to be very much bothered about their lending rates because they are linked to the external benchmark, and that will happen accordingly. And it is also conducive for the Reserve Bank of India because every time whenever the liquidity in the market, RBI want to change the liquidity in the market, what RBI will do? RBI will do their quantitative or qualitative measures. They will use those measures and try to change the liquidity as per the feasibility for the economy, and that will transmit automatically. So it is good for the win-win situation for both commercial banks and the Reserve Bank of India. So this is the thing, and it will reach borrowers faster because when the person who is borrowing loan from the commercial banks, for them the lending rate will affect those people who are borrowing from the bank. So if there is a policy change and in the favor of the borrower, in the favor of business persons or those people who are trying to borrow from the commercial banks. So if RBI is doing something or RBI is taking a step forward for the promoting the borrowing or for promoting the businesses, then that will automatically replicate in the lending rates and that will help the businesses. So the decision taken by the Reserve Bank of India or Monetary Policy Committee will reach to the borrower faster. Okay. The adoption of the external benchmarking will make the interest rate transparent. The transparency was also there because external benchmark will change in a very centralized way. Okay. So in other system, there was an individual bank which were taking their operation cost into consideration, and different banks had their different cost of their operation. So there was no uniform system of and there was no transparency because how the banks are deciding, there was their own affair. Okay, so interest rate became transparent after this system. So that's it. Okay. Now there is a transmission of monetary policy we were talking about, and we already discussed it. Okay, so the MCLR system was there, and post the MCLR, the external benchmark system, which we have written that repo linked loan. Okay, so repo linked loan we have discussed. So all these things you can see on the screen. You will be provided with that PPT, so you will get to know this. Fixed interest rate means the unchanged rate throughout the contract period. Okay, if the any business person is taking a loan from the commercial bank and something like that, then there is a interest rate which is fixed. So in the initial contract, the initial agreement on the first day before the contract signing, all the decisions, all the conditions have written in that agreement. So like 8%, 10%, whatever will be the interest rate will be paid by the borrower from to the bank. So there's unchanged interest rate but throughout that maturity, like for 5 years, 6 years, 10-year maturity, whatever is the maturity, throughout that period, the interest rate won't change. It is a fixed interest rate. That's the fixed interest rate system. And contrary to that, in contrast to the fixed interest rate system, there is a floating interest rate system. In the floating interest rate, is that one change periodically means over the period of time that rate of interest might change. Okay, so it is more or less the market driven. So when people are more interested and they have faith in the market, they go with the floating interest rate system. So accordingly, if market is going up, market is going down, the interest rate or in that particular contract will change. So, and this interest rate, the floating interest rate system moves in tandem with a particular index. We have discussed about it, the benchmark. One benchmark will be there so that with that benchmark, the floating interest rate will be connected. If the benchmark is going up, interest rate will go up, or there will be some mechanism. We won't delve with all those things. They are very much specific. We are reading about the generalistic things. So there's a floating interest rate system also, which changes periodically. And rate of interest moves up and down and floats, reflecting economic or financial market condition. Okay. And it moves in tandem with a particular index. We are also talking about the, when we talk about market, we talk about the security market, because the security market tells us if either the growth perspective is there, or the market is going down. We can see the indexes. Like the National Stock Exchange is there, Bombay Stock Exchange there in context of India. In international context, there are other stock exchanges also there. When we want to see whether market is going up or down, we can see the Sensex, that is the National Stock Exchange, the index of the National Stock Exchange. So what is Sensex? Sensex is the the market capitalization of the top 30 companies. Okay, is considered, and their performance is taken into consideration, and eventually we got an index. That if that index is going up, it means market is going up, and those companies or those top 30 companies on the basis of the market capitalization are making profit. Okay, not every, but it is an average. So more or less, market is going up. It means growth is there. So with that, the floating interest rate is, there might be connectivity between that. Okay, it depends, like with which benchmark you are connecting that floating interest rate. Similarly, there is one more index, that is the Nifty. Nifty is nothing but the top 50 companies of the National Stock Exchange. On the basis of their market capitalization, the index will be decided. Okay, so this is the thing about the floating interest rate. Next, the prime borrowers. Prime borrowers is the below average credit risk. Means a borrower which will definitely or very unlikely that person or that individual or that company will default on that credit. Okay, means majority of time the prime borrower will able to pay back the credit it have taken from the bank. So they want default on their thing. The subprime borrower is contrary to the prime borrower, means there is a huge probability that subprime borrower will default, and they also have the history of low delinquency, okay, or default. So bankruptcy would be there. There are so many things in the subprime borrowers, and we will also discuss about the 2007-8, the global financial crisis in which the Lehman Brothers came into picture in the world economic scenario. 2007-8 global financial crisis, which initiated in the United States of America. That is also called as the subprime crisis. Okay, we will discuss about this also in this lecture. Next is the teaser loan. Teaser loan, we also talked about that, where in the initial years have low interest rate. Okay, the credit card is one of them. In the introductory period, the credit card gives you so much offers. Those offers are that initially you don't need to pay any interest rate or something like that, but gradually over the period of time, the interest rate proliferated or increases. So the borrower who is taking part in the teaser loan exercise must take into consideration all the terms and conditions. Otherwise, they might face problem because gradually the interest rate will increase. And there is a possibility that you have a mechanism according to which the interest rate will increase. And sometimes this is also connected with some external benchmark. Okay, like according to market, you are taking part in the teaser loan exercise or you are taking credit card, and there's a teaser period for 1 year, 2 years, or 6 months. For 6 months, there would be no interest rate, but post that interest rate will be interest rate would be linked with the market. So if market is going up, interest rate would go up, down, or something like that. So this is also the possibility in the teaser loan. Okay. This is the PYQ. Okay, the teaser loan, commercial bank caused economic concern. We have discussed it because there was a little confusion about it. Teaser loans are considered to be an aspect of subprime lending, and banks may expose to the risk of default in the future. In India, the teaser loans are mostly given to the inexperienced entrepreneurs who set up the manufacturing or export units. We discussed it. What is the purpose of the marginal cost-based lending rate? The guideline help improve transparency in the methodology followed by banks for determining the interest rate on advances. Definitely, because in MCLR, the standard operating procedure is decided by the Reserve Bank of India. These guidelines help ensure availability of bank credit at interest rate which are fair to the borrowers as well as banks. Because the SOP is decided by the Reserve Bank of India, and mostly commercial banks are involved in this, and they are more or less scheduled banks. And scheduled banks are those banks which have fixed paid up capital. We have discussed the paid up capital there. And along with the paid up capital, they will do or conduct or carry themselves in such a manner that they will take care of the interest of the borrower. So every time when scheduled commercial banks function, they always take into consideration the interest of the borrower. Okay, that's how the faith of the people in the banking system remains. Otherwise, if they won't work in a bona fide manner, then people's faith will reduce, and ultimately the whole financial system will collapse, because these are financial intermediaries which channelize money from the one person who have surplus to the needy people. So in this way they need to work. So bona fide manner is really important. Like in bona fide manner you need to do, and RBI is there to decide the SOP. So definitely for borrowers as well as banks, because banks are commercial banks, they need to earn profit ultimately. So these are two statements. Then the non-performing assets. Okay, for a certain period of time, if the person who is receiving money or the borrower is not able to pay the interest or the principal amount, in that case, what will happen? They will be considered as the non-performing assets. So arrear, it means there is a delay. Okay, and default means the loan agreement to be broken. Means the conditions which already there, that according to these conditions the agreement will go on. But in case in any point of time in the that time period, that span of time for 5 year, 4 year, whatever is the maturity, in that span of time, if the person who is borrowing money is not following the conditions or not those conditions are broken, in that case that can be considered as the default. So arrears means the delay, default means some loan agreement to be broken. So ultimately, if NPA of any bank will increase, what will happen? The bank would not able to perform, bank would not able to do their business in a better manner. That's why the government intervention is also important. RBI's intervention also important. There is a prompt corrective action by the Bimal Jalan have designed that if the NPAs of banks is increasing, then what the RBI will do? RBI will set into the motion that is the PCA framework. That's a prompt corrective action. RBI will apply the moratorium on the bank. The bank would not allow to lend further. Okay, till the time their balance sheet comes into the healthy stage. Okay, NPAs place financial burden on lender, definitely, because a significant number of NPA would be there. If the significant number of NPAs would be there, it will ultimately affect the financial health of the bank. So that's also a key concern. NPAs are classified in different manner: the substandard, doubtful, and depends on the it depends on the length of the time overdue, probability of repayment. Like if you are not paying for 3 months, you will be considered in one category. If you are not paying for 4 months, you will be considered in another category. There is on the basis of time period they are defaulting or they are delaying, they will be classified in some names, which is not really important for us. The lenders have option to recover their losses. Okay, definitely lenders have, if there is a collateral, if there is an agreement and there is a collateral, then lender, like banks, definitely have the option to recover their losses. There is a procedure to recover losses. We'll discuss about it in the further slides. So if loan principal interest not paid for more than 90 days, that will be considered as an NPA. So before 90 days, that will not be considered as NPA, and either principal or the interest. There can be principal value or that can be interest value. Any of them, if not paid for 90 days, that will be considered as the NPA. There's one more thing that is called provisioning. So provisioning is nothing but the RBI norm that banks, if they are lending so much money, they're supposed to keep a little chunk of money in case they're supposed to keep a little chunk of money with them. So in case if there is an increase in the NPA, they will be compensate that NPA with the that reserve amount, that contingency, that emergency amount. Okay, that is called provisioning. So RBI decide what is the rate of provisioning. Okay. As per the RBI norms, banks must set aside funds to cover losses against their NPA. Definitely. Such provisioning of funds decreases the profitability of the bank. They will decrease the profitability of the bank because that provisioning, if NPS would increase, bank will use that provisioning. If NPS would not be there, then provisioning would be like उसको use कर पाएगा कहीं ना कहीं lending में, definitely lending करेगा. So that will decrease the profitability of the bank, and gross NPA, the overall NPA of the bank is considered gross NPA. And if you will subtract the provisioning from the gross NPA, you will get the net NPA, net non-performing asset. The revitalizing stressed asset, revitalizing means they are already, wait. Hello.
Hello, sir.
Okay. So come again. Let's start. So revitalizing stressed assets. The loan restructuring is the thing we have discussed yesterday also something about it. Then what is loan restructuring? Loan restructuring means the conditions of the loan you are going to change. So when you change the conditions of the loan, what will happen? You can change the interest rates. Like for example, the principal amount is 10 lakh we have discussed. You can reduce the principal amount, but that is the last resort. Usually banks or asset reconstruction company don't resort to that. That they will reduce the principal amount because that's not a good precedent. They won't go with that. What they do, they change the interest rate sometimes. Like if you are not able to pay the 12-13%, they will reduce the interest rate to by 2%, 3%. So the borrower is. Hello.
सर आपका वॉइस ब्रेक कर रहे हैं.
Voice is breaking.
नहीं ठीक है.
Okay, everybody.
Yes, sir.
Yes sir, कोई प्रॉब्लम नहीं.
Okay.
नो को चल रहा है.
Check your internet connection. So the banks or asset reconstruction company can change their interest rate. That is the restructuring. They can change the tenure also. They can reduce the tenure, or they can increase the tenure. A reduction would definitely not be there. They will increase the tenure. The maturity period they will increase. If 4 years are there, they will make it 5. Ownership can also be changed. Like if that loan belongs to you, that ownership can be changed. If someone else is there who can manage or ready to pay with the restructured agreement, then the ownership can also be changed. That's the internal things. We don't need to bother about all these things, but just understand that restructuring is the way these things work. Okay. Now, NPA, we have discussed that non-performing assets are like a burden for the banks, but banks need to pay back money to the depositors, because they are depositing money in the bank. They will ask for it after a period of time. So banks need money to repay them. So banks need to recover that money. So restructuring is one of the way. In restructuring, what banks are doing, in restructuring, they are changing the tenure and all these things. On the other hand, there is a recovery option also. If the asset is collateralized. Collateralized means if at the time of giving loan, banks ask for collateral, that you need to give some collateral, so that in case if you will default, we will sell out that collateral to recover our money. So there are provisions for the collateral. In a healthy system, there is always a collateral loans. So if there is a collateral, then there are two important ways through which the banks can recover their money. The first is the SARFAESI Act, that is the Securitization and Reconstruction of Financial Assets and Enforcement of the Security Interest 2002. So this act has been passed in the 2002 by the Parliament of India. That is Securitization and Reconstruction of Financial Asset and Enforcement of Security Interest. Today we are going to discuss about it in detail. Second is the IBC, that is Insolvency and Bankruptcy Code. We'll discuss about this also. Let's start. So this is a simple thing. We can look over it. Scheme for Sustainable Structuring of the Stressed Assets. S4A, Scheme for Sustainable Structuring of the Stressed Asset, is related to the 2017 CSE question. Okay, 2017 CSE question, in which Scheme for Sustainable Structuring of Stressed Asset related to. First is the Procedure for Ecological Cost of Development Scheme. A scheme of RBI for reworking the financial structure of big corporates with genuine difficulties. Disinvestment plan for Central Public Sector Undertaking, CPSU. Provision in the Insolvency and Bankruptcy Code. So these are 4 options. Now look at this. Capitalizing stressed asset. Look at the bottom. The important schemes regarding the loan restructuring. Corporate debt restructuring CDR, strategic debt restructuring SDR, a scheme for sustainable structuring of stressed asset S4A. So this is the scheme at that time that was in the current affairs. Okay. So for loan restructuring, this was the scheme, and this scheme was there. So it's a very simple thing they are asking. They're just giving the name of the scheme and they're asking related to. And in options, if you have little awareness about the current affairs of that time, you can understand that by options you can eliminate. The procedure for ecological cost, no. The scheme for RBI to reworking the financial structure of corporate with genuine difficulties, definitely. Residential plan, no. Provision in insolvency bankruptcy code, no. Okay, not related to this. So B would be the correct answer. Now, now we are going to discuss two important acts. The first is the SURFACE Act, which is really important for the recovery option for the banks. Securitization and reconstruction of financial assets. You can keep in mind the full form. Okay. And Enforcement of Security Interest Act 2002, more commonly known as by shorter name SURFACE Act. We usually call in the mundane that SURFACE Act is a legislation that allows banks and other financial organizations to recover bad loans effectively. So if there are bad loans, there are non-performing assets, this act will going to help them to recover that effectively. Okay, how it will do? How it will go? Let's go. The act can be utilized to tackle the problem of NPAs. The act can be utilized to tackle the problem of NPAs, non-performing assets, through different procedures. However, this is possible only for secured loans. This is only for secured loans. Now, what are secured loans? Secured loans means those loans which are given against some collateral. If collateral is there, then only the SURFACE Act would be used, because SURFACE Act need the collateral. Okay. If those are unsecured loans, there is no collateral. In that case, this act cannot be used by the financial intermediaries or any bank, non-bank, or NBFCs.
Sir, repeat please.
Okay. What are secured loans? Secured loans are loans which are given against some collateral. Given against some collateral. Like if you are going to bank, you are asking for loan. They are saying, just give us some security, some collateral. You are saying, okay, these are papers of my house. Now I need loan. Okay. So papers of your house means your house is acting as collateral in this process. Okay. So in case if you will default on the loans, what bank will do? Bank will sell out your assets, sell out your home to recover their losses. So that is the secured loan. If there is a collateral and the loans are given against the collateral, then that is considered secured loans. Unsecured loans are loans which are there is no provision of the collateral. So if loans are unsecured, then SURFACE Act cannot be invoked by the banks or financial intermediaries. If there is a collateral, then they can use the SURFACE Act. Okay, the collateral plays a very important role. If there is no collateral, how will you recover? Okay. If there is a collateral, you can sell out and you can recover. Okay. But no collateral, how will you recover? For unsecured loans, banks should move the court to file a civil case of defaulting. Okay. If there is an unsecured loan, what the banks will do? Bank will go and file a civil case in the court. General court they will go to general court and file a case defaulting that person is defaulting on our loan. Okay. This act makes the court's intervention unnecessary in case of secured loans, or if there is a secured loan and there is a collateral involved, then bank would not need to go to the civil court. Bank will not civil court. Okay, so court intervention would not be there under the SURFACE Act. The first Asset Reconstruction Company of India, ARCIL, was set up under this act. So ARC is the Asset Reconstruction Company. Asset Reconstruction Company is nothing but a kind of bad bank. Okay, we have discussed about it also. What is a bad bank?